Give me the question. No. So you do a speaking question. Yeah. Then maybe go to
Okay, ladies and gentlemen, thank you so much for joining us to our FinTalk event. I'd like to really thank our event's partners, Cayman Finance Association, the CFA Society, and Cayman Enterprise City for coming together to make this event possible. So it's a great teamwork and a fantastic network of people who are set up in the special economic zones. So we're excited tonight to highlight two individuals who have businesses in the zone, who are going to share their thoughts, dig deep, and ask some really good questions. So I'll hand it over to Yaro, who will take it from here. Thank you.
Good evening, everybody. Pleasure to be here. It's a special night tonight, obviously having Raoul Pal in the house.
It's not that special, I live down the road.
No, I mean, he's a bit of a legend in the crypto space and the CFA space, so I think it's going to be an interesting evening tonight. We'll do a quick round of introductions, then cover the current market trends, go into, obviously, traditional markets, and then go into a bit of crypto, and then I have some questions to fire at Raoul. Questions that he hasn't seen in advance of this event, so it's going to be interesting, yeah. Do you want to go first, and then I'll do an intro after?
Sure. So I think most of you know me, but my background was 30 years of financial markets, mainly in global macro. I was at Goldman Sachs. Then I ran a large hedge fund with Andrew Linford there for GLG Partners in London. I then opted out of the rat race in 2004, started writing macroeconomic research called The Global Macro Investor from the Mediterranean coast of Spain. I kind of cracked the lifestyle thing, and then I ended up coming to the Cayman Islands, built a house in Little Cayman, and then ended up living in Grand. Started two other businesses here. One was Real Vision, which I think many of you know as well. It's like a preeminent financial media platform for finance. We've taken people down the crypto journey since 2014 when we launched. I think I was in crypto. I wrote the first ever strategy piece on how to value Bitcoin, I think ever published in 2013. So I've been in this space for a long time too. And traded all markets from currencies, commodities, to credit, to crypto, to, I mean, you name it, I've done it. And I also have an asset management company, Exponential Age Asset Management. Our first product and flagship product is a crypto fund of hedge funds. We invest in the world's best hedge funds to capture the trend of going from $2 trillion, where the industry is today, to 100 trillion, where I think it goes in the next 10 years. I'm on the board of the SUI Foundation, which is one of the largest layer one protocols in crypto. I think that's all the businesses I'm doing. I lose track.
That's good. So I'm a lawyer by trade. So I'm admitted as a solicitor in England and Wales and an attorney in New York. I've been a retail investor of BTC since 2011, 2012. And then around 2015...
You're flexing.
Huh?
You were earlier than me. He's flexing.
No, I mean, even though I'm slightly younger than you, I guess I was sort of the mindset of taking computers and televisions apart. I wanted to do computer science as my first degree, but decided to go against my father's wishes and go into law, even though he's a nuclear scientist, but mathematics and things like that. Anyway, I did a thesis on smart contracts in 2015, 2016, when still people were not understanding what the hell crypto was. And then joined the space 2019, managing a project called Chainlink. Chainlink is the main Oracle provider in the space for price feeds, CCIP, a lot of different products that we offer. So we're sort of the main player when it comes to as a middleware entity, as a middleware project that connects smart contracts off-chain to on-chain, off-chain data to on-chain executions. And we work with a number of big players in the financial space, including Swift, JP Morgan, Fidelity, BlackRock soon. And Swift are going to be using our technology for a lot of the infrastructure for the cross-chain interoperability. So here we are now. So I manage all the Chainlink offshore entities, if you can pull it that way, including the foundation entity. So firstly, we're going to start off the current state of markets on the traditional side and then go into the crypto side.
So how I look at markets is I use a combination of the long-term secular trends, what things are trending over time, then the business cycle, and then liquidity. And I found over the years, my framework's been adapted as I've understood more and more that liquidity has become almost the total driver of returns. And then you get some excess returns for secular trends. When you break down what I mean by all of that, the business cycle, as we know, goes up and down. You can use the ISM as a way of understanding the business cycle. We're currently at the turning point of the business cycle, where on a forward basis, we should see the economy improve. So the calls of recession stuff, that was from 2022. Right now, we should be seeing expansion on the road ahead, whilst the rates are coming lower. But what I found in my work over the years is I uncovered something that I refer to as the everything code, and which is a bit of a kind of hubristic title, but it was really shocking. I think I was one of the first people in the world to find that what had happened back in 2008 was we had a global debt reset. As opposed to a debt jubilee where you don't pay any of the debts back, you had an interest rate jubilee. And so what happened is all of the major central banks and governments around the world agreed not to pay interest. That's what zero interest rate policy was. We kind of were sold that it was a story of we need stimulation. It was not stimulation. What it actually was a jubilee and you don't need to pay your interest rates. Why? Because all of the governments around the world have got to 100% of GDP in debt. Now, when you're 100% of GDP in debt and you have an aging population, you tend to have slow GDP. So GDP, trend rate of GDP in the US, about 1.75%. Let's call it 2% for easy maths. And let's say average interest rates over the last 10 years have been 2%. So 100% of all economic activity goes to pay the interest payments on the debt. Issue is the corporate sector is over 100% of GDP in debt. This is the only game. Everything else is irrelevant. Every single asset class, every single economy, every single central bank is all highly correlated based on this debt cycle. Why this debt cycle? Well, back in 2008, everybody reset their interest rates to zero and then restructured their debts maturities at all government level from 3 to 5 years. So you've got a 4-year cycle and it's perfect. It's also exactly what happened in the 1950s after World War II, because we had the same issue then and we did the same thing then. And as opposed to zero interest rates, what we used then was yield curve control. So, okay, we understand that. But what they're doing is every time the debts come due, which is this year and next year, we've got 10 or 11 trillion in the US alone of debt to roll over. They print money in the form of liquidity. It's not just the balance sheets. Every aspect of liquidity you can find in the system, they understand the game. They all do it together. And they're doing it now. So liquidity is the driver. So when you start adjusting markets, this is the magical thing. Once you adjust the S&P 500 by Fed net liquidity, the largest measure of liquidity in the US, the S&P 500 has gone nowhere since 2008, 9, because it fell in 2008. It's gone nowhere, almost zero returns in real terms. Gold, same. Real estate's different because you use leverage, but if you would use unlevered real estate, it's gone nowhere. In fact, no assets have gone anywhere except 2. There's only 2 assets in the world that outperform debasement of currency. Debasement is the excessive printing of currency to pay your own debts, using a credit card to pay a credit card, for example. It's only technology and it's only crypto. And then when you look at the 2, you've got crypto, technology, the NASDAQ, done 17% a year. The debasement of currency, by the way, is about 7% a year. No, sorry, 8% a year. 8% a year plus the rate of inflation. You're talking about 12% hurdle rate, something like that. What you're finding is the S&P 500 does 12%. Zero. You're making no money. You own that, you don't get any wealth generation. NASDAQ does 17%, so you are. It's compounds over time. Bitcoin, which is the worst performing of the major crypto, is doing about 130 something percent, depending when you measure it. We've never had an asset class like it. Okay, so that's the general framework. So where we are today? Well, liquidity, being the main driver, leads the business cycle. It bottomed in exactly the same time the NASDAQ and crypto bottomed, which was October, November, December 2022. And it's been going up, and those markets have gone up. The other and they lead because they follow liquidity. Most other instruments, the Russell 2000, oil prices, copper, they tend to be living in present day business cycle, which is today, which is just picking up. So you're starting to see commodities still rock bottom, starting to pick up. You're starting to see Russell 2000, you're starting to see the equally weighted S&P now all-time highs. You're starting to see that happening. So in terms of markets, what we've got is probably 18 months of phenomenally good returns. You could throw a dartboard blindfolded and make money. So that's great. It's one of those great times where the business cycle's going up, interest rates are coming down, liquidity is coming into the market.
Over the next, I guess, 15 months.
15, and some of these lag, commodities will keep going up probably into 2026, mid-26, because it gets inflationary later in the cycle.
Yeah.
So we've got a really nice period ahead of returns that we can all call ourselves geniuses, which is nice. And so
It's a crypto summer where even the shed coins did well.
everything does well. Honestly, you can be a total moron in this market, which suits me. I'm fine.
Which is perfect for everybody.
Yeah, that's right. So that's where we are today. So it's we're coming into the easy environment. Tomorrow the Fed will cut 50, 25, whatever, it doesn't matter. Don't forget, step back, all of the noise you read, all of the stuff. Rates are at 5.5%. Headline CPI is at 2.5%. Trueflation, which I think is built on Chainlink,
Yeah, that's right.
is at 1%. Right? Rates are 300 basis points too high. They're going to come down a lot. Everyone's going to feel a lot better. Spending's going to come back. Corporate earnings rise. Everyone's going to feel great. And the cycle will repeat. 2026, the cycle slows down again. And then we go through the same debt refi cycle all over again.
Yeah, that's right.
Oh, and the other function of this is financial conditions are also easing. Financial conditions, we find the best measure of financial conditions is the dollar, which has been weakening. It should do at this point in the cycle. Commodities, which have been relatively weak, which is great. Normally they'll start picking up very soon. And then rates, which will come lower. So we've got financial conditions easing, the Federal Reserve easing, most of the central banks easing. We've got stimulus coming from almost everybody. The Fed, less so yet. The Chinese are leading it because they've got the slowest economy. So it's all to look forward to.
Interesting. Would you be able to go into a bit more detail on the demographic crisis and age exponential thesis?
Yeah. So
high level, just because I know it's
quite
a lengthy topic.
The key thing to understand is what drives GDP. I'm not talking about the little measures of imports plus exports and blah, 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 blah. I'm talking about what drives trend rate of GDP in economies. It's actually really simple. I call it the magic formula, but all economists pretty much agree that this is basically right. It is population growth plus productivity growth plus debt growth. Debt growth is a borrowing of the future. Now, when we look at the current state of the global economy, debt growth has stopped pretty much in every major developed country. It stopped in 2008, and the debt growth is just servicing existing debts. So we've got population growth. Every single Western developed country, plus China, plus all of Southeast Asia, obviously Japan, are all shrinking now. I think the UK is not yet shrinking, but it's very close. The US is not yet because it's had a decent immigration rate. Canada has not. Why is Canada not having big recessions? Really simple, immigration. Australia, why has it gone 27 years without a recession? Immigration. It's really that simple. I was such a moron, never understood this. So that is going on. Every other country is declining. And the US is going to exacerbate it, as many countries are. Germany's about to do the same, which is like, we're closing our borders to immigration. Well, guess what you're going to do? You're going to guarantee your trend rate of GDP growth falls. Why has Japan's got the slowest GDP growth in the world? Very simple. Japan has 0 immigration. So of course, productivity growth. Old people, not in jobs, don't do things. They're non-productive. So productivity falls. So this has been the problem we're facing. We've got increasing debts to cover over, paper the cracks of a system where trend rate of GDP has gone down. And we're trying to sustain, it's like somebody trying to sustain an income level or a spending level based on their past, and their income's gone down. That's what we've done. So we're stuck in this situation, and the only way out is to keep debasing the currency to pay the debts. If not, the whole system goes under. Okay, fine. We can keep doing that for a while. We're doing it right now. And you'll see more and more of this over the next year and a half. But there is only one way out. You either have to grow population, or you have to increase productivity, or both. Now, issue is, demographics are destiny. We can project 35 years out into the future. There is negative population growth in every single major country. We're fucked. It's just not going to happen. Then you've got productivity growth. Well, if the population is that old, that's all over. And then something happened. Something so big that is beyond human comprehension. We have suddenly scaled human intelligence infinitely. And that was the rise of AI. And it came at such a pace that even now to this day, most people are so far behind understanding how powerful a force this is. But what it is when you put AI into machines, you've got robots. That's infinite human labor for, over time, almost zero cost. The cost of AI compute has fallen 97% in 2 years. We've never seen a more powerful deflationary force in history. The AI itself is scaling all of you guys to have zero value. I'm sorry, but it's true. No, literally. If you're not using ChatGPT all day, every day, you are behind, because it is better than you at 90% of what you do, and 90%, 95% better than me at everything I do. No, I'm not joking. We all laugh nervously. It's actually true. As a lawyer, lawyers they maintain a cost because of scarcity of knowledge.
No, I mean, the technology can be utilized in a smart way if you know how to use it. So it complements the human mind.
It does, and
yeah. But the people that use it have to be smart people. That's the
not for long. Only today. But the point being is, it closes the gap between the shrinking population and the growing robot AI population. And I think by the time we get to about 2030, this is not a particular date, but it's around that, that we start hitting something I call the economic singularity. That's when productivity, I'll come on to productivity in a sec, because it's a really important part of this conversation. When population growth, because of AI, starts going almost infinite. That's infinite humans. So what does that mean for GDP? If it's the multiplier, the big multiplier for GDP goes bananas. But does it accrue to humans? How does it all work? I don't know. I have no idea. I have ideas, but I do not know the answers. None of us do. We've never lived through it. Productivity. Now, here's a really interesting thing. What is productivity? Productivity is a measure of output per kilojoule of energy. That's really what productivity is. Now, people criticize the EU and China for their green energy policies. They're throwing away money. They're wasting it. They could just use fossil fuel. Yada, yada, yada. They have no understanding what is happening. What the EU and China is doing is forcing down the cost of energy to zero, the marginal cost of energy to zero. And that is a multiplier, because if your cost goes to zero, let's say the cost of electricity falls 50%, it's a 2x multiplier on productivity with nothing changing. Add AI and the numbers go bananas. And there's really interesting, the more I spend time looking at this, the more people say stuff like, well, obviously the answer is we need to do nuclear. Okay, fine.
Well, I mean, that's already happening in a lot of countries.
Yeah, and Microsoft and companies are doing it, and decentralized grids, and there's a massive change. But when I really zoom out, we have the largest centralized nuclear plant in our solar system above our skies every single day. We just don't know how to harness it properly yet. So there is a bunch of stuff that the AI will help us solve that will do. So we're going through this period of debasement of currency that probably goes into 2030, 2032, something like that, beyond which we don't even know what an economic system is anymore. And by the time we get to the late 2030s, we don't even know what money is in a post-scarcity world, which is simply staggering.
Yeah, I think the economy and the economic systems around the world are going to change drastically because of the contributions of AI and how things are going to progress and innovate in multiple sectors. I think that's what you're saying.
More than that is AI, and then I'm not trying to come at it in the usual way of AI is coming for our jobs.
No.
But AI is going to already, OpenAI, why they are so fast at competing is the AI is being built by AI. They already have ChatGPT 5 and they've had it for 2 years. They're building AI using AI. Now, right now, if you started a new online web business, a DeFi platform, let's say, a DEX, even better. A DEX, perfect, right?
Decentralized exchange.
You start a nice DEX online. It's really cool. I like it. It's like Jupiter. Some of the cool.
Yeah.
I can just
With a social implementation where you can log in with your Facebook account.
All of that,
which is what's picking up
and
right
it's
now.
beautiful UX, beautiful UI.
Easy to use where my grandmother can use it because that's what we're aiming for.
And I'm going to just put it straight into my ChatGPT and say, build me this. Literally, by next year, it'll do it in 3 minutes.
Yeah, because a lot of that data is open source, but some is proprietary. So if it's closed,
it figures it out. Don't forget, it's smarter than we are, right? It has all of humanity's knowledge in it. So it's just going to say, well, the probabilistic outcome is this is how I build this website or this whole DEX, and therefore I can replicate your business.
Yeah.
That becomes a very different world.
But that's the thing. It's going to take time for ChatGPT to develop to an IQ of a human being of 120, 130.
No, it's already there.
I wouldn't say so.
No, ChatGPT, the new version, is already 120.
Yeah.
And now this is, I think, I'm sorry, I'm not insulting you. It's a mid-curve take. It's 120 IQ.
Yeah. No, I'm saying
every single subject on Earth.
Which is the average,
We're 120 IQ at some things.
Yeah.
Right? It is a polymath.
Yeah. Everybody should be a 150, 145, no?
Well, it's going to make all of us.
It's going to help, exactly, yeah. No, I think that makes sense. Obviously, at the end of the talk, I'd like to fire some questions from your side, but I'll get into, I guess, the state of the market for crypto or a bit of history for those that really haven't heard about crypto or the blockchain space. And obviously, it all started in 2008 with the white paper of Bitcoin and the evolution that started that. At some point where 2010, where pizza was costing 10,000 BTC. I think it's around the time that I heard about Bitcoin, and it was only 2 years after that that I actually put some money into it. And then there was an emergence of the alternative coins for several reasons. One of them is because obviously the proof of work, which Bitcoin runs on, is very inefficient. It holds value, even though it's probably the best asset class in crypto, but you couldn't really program it. And that's why Ethereum came about not very soon, but in 2015, it came about in order to make sure that smart contracts could be deployed for a number of different reasons. And that's when the alternative coin boom started to pick up. Then fast forward to 2017, 2018, the ICO boom, which was a huge thing in the Cayman Islands. The amount of foundations and first projects set up here was abysmal. 30% of them were probably scams, I think, as a lot of people saw that.
Charlie, they're all in the CEC. we don't talk about that. Sorry, Charlie. Charlie's not here.
So it's been an interesting time there. Then we had the DeFi summer, NFT mania, sort of, there's the gold rushes of the space and the different things that people experienced and gained riches. Where I remember somebody was buying a virtual yacht or selling a virtual yacht for $2.5 million worth of it as an NFT. It was easy money, literally. If you didn't get in, you must have been sleeping at the wheel in that sense. Then, this, the years gone by, the major institutional adoption came about with including PayPal, Visa, Tesla, a number of central banks obviously been developing the CBDC, which is a central bank digital currency, which is going to replace, paper money probably in the next 10 years, over time, gradually. And right now, where we are, or as of obviously yesterday, let's put it this way, is the institutional adoption is picking up. There are, as you've seen, a lot of ETH, for example, Bitcoin ETFs that have been implemented. At the same time with that, the regulatory crackdowns the last 3-4 years have really stepped up because especially the SEC or the CFTC, which are sort of the main two regulators, or at least, as far as they think, they're the main regulator for certain digital assets, because there's still a bit of an agency warfare going on there, where they haven't decided, if certain things are commodity or security, and that's been quite harmful to the space. But at the same time, it's cleaned out all of the poison and a lot of the parasites that, which makes the room for mass adoption, and for those people that have never heard about crypto, makes it more trustworthy, I guess, slowly but surely. So the network effect is coming along. And, a lot of the macroeconomics, which is something maybe I can pass over to you in regards to, the correlation between Bitcoin and the liquidity side of things. Maybe you can get into that.
Yeah, I mean, what's become obvious is I talked about this theme of debasement, and there is, I call it a supermassive black hole. Right, we're all used to, many of you CFAs in the room, and we're all in the investment world, and we're used to diversified portfolios. It's kind of a weird world where none of that matters anymore. Everything's correlated to this liquidity cycle. They're either lead or lag. That's it. That's all you've got. That's the only tools you've got to play with, unless you're dealing in alts. Even most alts are actually still correlated to the business cycle, which makes it a problem for people in how to think about this world. But I have done the terrible thing of just saying, well, if it's all correlated, I just want the best risk-adjusted asset class there is. And once you actually do the work on it, bizarrely enough, it's crypto. The most volatile, the thing that falls 80% every 4 years. Every 3 years, crypto is the best performing asset class. Every single year, every single 3 years, until the year, 2 years after the US election. This is this debt refi cycle, and it's always the worst. And in the worst, it goes down 80%. Most people would say that is an uninvestable asset. How can you possibly buy something that goes down 80% every 4 years? And yet, its compound returns since 2011 are 2-point-something million%. Best performing asset class in all time ever. Its annualized returns, Bitcoin alone, is 130-something%. That includes 4 80% drawdowns. And we can't get our heads around it, particularly as CFAs, because you're not taught to do any of this stuff. But it is completely the opposite of what you're taught. But it's an incredibly powerful thing. So the macro backdrop leads us to hyper-concentrate risk. And I didn't understand, I was too late to this everything code cycle to really understand it. But look at the richest people in the world. Who are they? Elon Musk, Larry Ellison, Bill Gates, all of them are tech people. Most of them made all of their money over the debasement of currency plus secular trend cycle. It's one trade. Why is Jeff Bezos and Elon so rich? They've never sold a single share. Well, Jeff Bezos did. He had to give his wife half. But other than that, Elon has never sold a single share apart from to buy Twitter, so he just accumulates the whole kind of ecosystem he's building. That's the same with this whole space. So, that's why, as a macro guy, I'm not the crypto kind of junkie who just believes in this thing. I've done tens of thousands of hours of work, and I've realized that it is the only asset that matters.
So, as you said, the liquidity is important. It's the backbone of your thesis there. But how do you respond to the argument that liquidity crisis will be exacerbated, not solved by decentralized systems that lack institutional safety, nets like central banks? What's your opinion on that?
So there's two forms of liquidity. One is a private sector liquidity crunch. Okay, and we saw that in 2022. It's actually one of the larger liquidity crunches we've had in the last 40 years, barring 2008. What is the answer to every private sector liquidity crunch? State level liquidity. Debasement of currency is the answer 100% of the time. In which case, what happens is you reduce the left tail of markets. This is, again, something most people don't understand. The left, we're used to a bell curve distribution, and we think about distribution of returns. We have taken away the extreme downside. So we got to 30% downside in the S&P 500 in the highest rate environment we've had since the 70s. The moment we got there, what did the central banks do? They stopped putting liquidity in the system. You debase the currency, optically, the value of the collateral of the system rises. So what that does is entirely removes the left tail. So as a macro investor, if I'm learning that the central banks and governments have removed the left tail, which is the down 30 to down 70, well, hell yeah, that changes the risk reward for every asset. So it's an extraordinary macro risk-taking environment. So I would say anything that a decentralized system or anything causes within liquidity, so like the implosion of FTX, wherever it may be, right? Or the implosion of the private equity business, right? This is a huge, huge over-leveraged industry that could one day implode. What is the outcome? Money printer go burr.
Yeah.
More cowbell is the other way of saying it.
No, of course. All right. Yeah. So I think I'd like to ask some questions about DeFi as well, and your opinion on that. What if your reliance on adoption of digital assets and DeFi by institutional investors backfires, right? One of the things just mentioned briefly, creating a two-tier market where institutional actors have better access, better information, and liquidity than retail participants, retail investors.
There is always a multi-tiered market. There is always somebody with more information, right? You and I have been in crypto a long time. We have more information than somebody who's not been in.
At pre-seed level, especially.
Yeah, I don't do all the pre-seed stuff, but you do. So you get different information than I do. The institutional adoption of DeFi will be segregated from retail adoption because the pools of capital, liquidity, Apollo, Blackstone, the investment banks, they will provide huge pools of capital because the returns are higher. And it's actually better capital to have than individual capital. We can have decentralized capital as well. I think it's a multi-tiered world where we don't crowd out the individual. We can create all sorts of different opportunities, but we actually want that institutional capital to give that deep liquidity that doesn't disappear when shit hits the fan.
It'll be tiered. Over time, it'll be institutional, and then over time, retail, I guess, in that sense.
Well, it's retail now as the backstop for the liquidity, right? The real liquidity is provided by a few trading firms plus retail investors.
I do. I think it's sure it's going red. It must be.
Right.
Mine is green.
I've probably sworn too much. He's just told me. It's so.
We're alive, so yeah.
So no, look, I think there's room for everybody. I think that is the key point.
Yes. No. Thank you. Thank you for your input there. How do you address the inherent contradiction in optimism for decentralized finance and decentralized systems when they remain largely reliant on centralized stablecoins like USDT, Tether, or USDC Circle to maintain liquidity and stability?
I am not hung up on decentralization being the holy grail.
To some extent, yeah. I've heard your podcasts; they're very good, but there is an element of that.
So there are some things like Bitcoin is ultimately decentralized, and other things that is less so. I don't have an issue with that. So if somebody can scale, and on Ireland we've got Aave, we've got MakerDAO, we've got some really good decentralized projects that have proven the test of time.
From the 2017 boom, yeah, the ones that
and they've thrived. They've
including
survived.
Chainlink as well, yeah.
Including Chainlink.
We have a different model. It's not a DAO model, but yeah.
No, but so you can have decentralized systems, and you can have more centralized systems. Again, I have no issue with that. If the market needs more decentralization, they will build it, just because of the nature of the space. Because we don't need a banking license. Don't forget, you can't do that with a bank. I tried to set up a bank in 2012.
As a digital asset bank, you mean? Or,
No.
In what
I
sense?
saw what was going on in the system, that we didn't own anything. So after the Cypriot banking failure, your deposits were not your money;
So it was
they were
backed by
actually
something, yeah.
credits.
Yeah.
It was a liability. And then what I also found out was, obviously from Lehman and everybody else, is that nobody owns anything because there's 32 claims on each piece of collateral. So I'm like, okay, I'm going to go in with a bunch of family offices. This is how I got into crypto. A bunch of family offices went around the world trying to start the world's safest bank. The idea was to only hold cash at the US Treasury. And we went around the world trying to set this up. We settled on a Texas trust bank. We had the ex-chairman of the FDIC.
Mm-hmm.
We had just about to buy the bank. The Dallas Fed called us in, said, this is a brilliant idea. And we're like, thank you. We're quite proud of this idea. We know the system needs it. They said, yeah, the system absolutely needs it. We're never going to give you a license. And we're like, why is that? They said, you will take all of the deposits.
Yeah.
Now, so that's why we can do it in crypto world. You can't do it in banking world. You simply can't. This is exactly what Caitlin Long happened to her with her bank out of Wyoming.
Mm-hmm.
She had the same idea as I did, and she built the whole bank. And then the Fed went, no, you can't have a non-fractional reserve bank.
No, it makes sense. Obviously, I think the protection mechanisms in place by local state governments and such for obvious reasons, just because they're also afraid of change. I think that's quite important.
Well, they were afraid of what just happened with the Silicon Valley Bank. They were afraid of if you had a choice of Bank A, Bank B, both gave you ability to store savings and interest rates, but one had no other borrowing lending, what would you do? You would go there.
Yeah.
So therefore, all of the money would have come out of the system, which is what happened with the basically money market funds.
Yeah.
Roughly the same thing.
That makes sense. The next question I have is about closer to the tokenization of assets. So real world assets tokenization is quite a hot topic right now. I believe next year it's going to be something that's going to pop. Obviously includes tokenization of financial instruments, bonds, etc. So the question to you, Raoul, is, so what if the future of blockchain technologies doesn't lie in the tokenization of assets or DeFi protocols, but rather the use of private permissioned blockchains by governments or corporations? What do you think as far as, because there's been a lot of development in that, especially, for example, with JP Morgan and Onyx and other interesting developments there. Like, what is your view on that?
That's not working, is it? I think, I think generally, overall, again, we will choose. Some people will have, I think the entire insurance industry will go on chain. And there's only a group of reinsurers, or, there's actually small groups of these people who aggregate risk. We saw it with, who was it? Who's the big commodity trading house? Dreyfus. Dreyfus the head of trading is an investor in XPAM, and she was like, "Oh, we've had blockchain settlement for letters of credit, the certificates of quality of the commodity we're shipping, and all of these things, and we've had them since 2019." I'm like, wow.
But that's because of direct tokenization. It wasn't synthesized practice. It was them having direct input.
And they did it with 10 different commodity producers, Cargill, all of the others,
Yeah.
and they did it on Ethereum. But it's essentially a private fork of it, or a layer 2, let's call it that. We will see different versions of this. Some will try and keep it private, but the issue is you lack decentralization. So it's just a slightly better database. Fine.
Yeah.
That will work for some people. Others won't work at all. So again, I think Bitcoin has kind of forced people to think about this holy grail. Everything must be ultimately decentralized. It's never going to happen because power battles say centralization is where they want to go to. And that fight between centralization and decentralization is endless.
Part of the mass adoption, obviously, having that centralization means there's reassurances for the masses, those people who don't quite understand what these assets offer. Whereas, certain elements of the space are going to be centralized, but other things are going to be decentralized, as you said. Yeah. And I think right now on the tokenization side, it needs to be the push needs to be more centralized in order to actually correct everything and get to understand how tokenization of certain assets work before even decentralized comes. I think that's one of the key things. Obviously, just being wary of time, and we have 15, 20 minutes, I wanted to make sure that everybody has time to ask their questions, because I feel like there's probably more questions than answers here. And it's a lot easier to answer questions than prepare and talk about stuff that we already know. So, because I'm not sure how versed everybody is here. So, is there a microphone that we can use? That we can pass on?
Yeah, this will pick up on the YouTube channel, so I'll pass this one around.
Yeah,
Yeah.
sure.
Fantastic.
It's not working. That one.
It will pick up on
You sure?
Yeah.
Okay, well,
sure.
fantastic presentation. Really wonderful. Thank you so much. I'm really interested in knowing Raoul's views on the geopolitical impact. Not probably so much on crypto, but that would be interesting, but more on the traditional finance. And in particular, I'm interested in your views on China and Hong Kong.
I have a very different view to everybody else on this. I noticed it a while ago when, out of the blue, Gavin Newsom, of all people, goes to China. Not pre-announced. I'm like, Gavin Newsom, he has zero geopolitical profile. He turns up in China. Now, okay, fair enough. A US governor of the largest state in the US could turn up there. Who would he meet? He would meet the equivalent of one of the largest, let's say Canton, or one of the largest provinces. No, he meets Xi. I'm like, the media didn't really say a lot. It was like, Gavin Newsom goes to meet Xi. Okay, that shit does not happen. The next thing is Gavin goes, hey, come back to my place for a party, brings Xi not to Washington, not to the United Nations, but brings him to San Francisco. And he meets with all the tech guys and goes. And nobody asks what that's about. Next thing is Janet Yellen twice goes to Beijing. Almost unheard of. And it's just been leaked that they've kind of agreed about the dollar and funding and the Eurodollar markets and the need. And I see this and I observe this stuff and I listen to the narratives. I'm like, okay, they've done a deal on Taiwan. It's obvious. Because I had a global macro investor roundtable in, when the hell was it this year? Morocco. And several people, smart hedge fund managers, were presenting about China risk. And everyone does that map of Taiwan and goes, a map of China and say, if you turn upside down, you see Taiwan and it blocks they want Taiwan back, blah, 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 blah. It's going to go to war. It'll happen in August or this month. Because I'm like, so we listen to these smart guys talking about this. And but somebody gave a presentation about how strategically important Taiwan is. Literally 95% of all semiconductor technology is in that one place. The problem is we've just invented AI. The single most powerful invention the world has ever made, potentially that or the splitting of the atom, of that order of magnitude. And so what are you going to do? Are you going to go to war? Because everybody needs this thing, and Taiwan Semi owns all of it. So then somebody else at the same GMI roundtable, it was an extraordinary thing, just uncoordinated. Somebody presents about Taiwan Semi as a trade idea, and it's like, oh, they're building 3 plants in Arizona, 1 plant in Japan, and 1 plant in Germany. And you're like, huh. How long do they take to be completed? 4 years. So in 4 years' time, the US will not need to manufacture anything in Taiwan, no. Will Germany? No. Will Japan? No. So it seems to me that Gavin Newsom went to China and said, let's sort this out. We're going to have to share Taiwan Semi. And how we'll do it is we will build it on our home soil. You can keep Taiwan. And like the Chinese did, or the Brits did with Hong Kong, we're just going to give it back.
Like in a peaceful way, amicable way.
Yeah. And I don't think that's priced in. And I think it's a 90% probability. Because nobody will go to war over this. Why? Because every outcome, Taiwan Semi goes bust and AI technology is lost for a decade. So it can't happen. The game theory says it cannot happen. So I am completely the opposite on this. And we've just seen the announcement of how basically the US is going to work with China to help fund its property sector. They'll do it via the Japanese banks, which is why the Japanese ended up weakening the dollar and strengthening their own currency. So I'm actually wildly optimistic and don't think it's priced in.
Yeah, I feel the same. And obviously, there's the economic stance, which is more obvious, as you said. But on the political side, you hear a lot of different things, or you've heard a lot of different things in the last 3-4 years about Taiwan. But the deal's done. Taiwan is already China. It will be. It's not de facto, but de jure, I guess.
And we will not fight over it.
Yeah, there won't be a war.
Taiwan Semi will split.
100%. Yeah. Next question.
Thank you for the presentation and for addressing us. Very valuable. My question is,
Should we pass? Can we pass the mic? Yeah. No, just so then there's people at home watching, so they can hear your beautiful voice.
thank you. Thank you. My question is, how many quality altcoins do you guys think are out there? Just generally speaking, I mean,
That number changes quite often. Do you want to go first?
Yeah. The answer is how many high quality small cap companies are there? I don't know. How many junk bonds are quality? I don't know. But some will be. So it's a matter of doing the homework. Some will be big projects that survive. Don't forget, this is unlike all other parts of the equity space. This is essentially liquid VC. So you should, by definition, expect a high probability to fail. And for a healthy market, it should. I would argue some unhealthy aspects of crypto are some projects that should have failed don't fail because they have adoption by retail investors too early in their life cycle. But that is what it is. So the answer is we don't know. What's going to come out of nowhere and be worth multiple billions? Several tokens in whether it's the AI space or whether it's the interoperability space or whether it's who knows what. But it's the same with equity or tech investing. But what we're getting here, which is hard for us to understand, is this is early stage VC, not ultra early, but it's still VC stage stuff. So we have to understand that you need a skewness in your portfolio, that your winners have to be 20x's, 30x's to pay for the ones that go nowhere and the ones that fail. So it's kind of a different thing. It's a new way of operating, I think.
Just sorry, yeah. just to answer that question, I guess a little bit more detail. You shouldn't really focus on, the altcoins. Yes, there are a number of different altcoins, but what Raoul was alluding to is that all of the projects that have deployed, minted a coin within that ecosystem, for that project, you have to obviously look at the team behind that certain project, the technology they're building, and what type of marketing they're doing. And those are the sort of the trifactor as far as how successful the coin is going to be. But it doesn't mean in the long run that the project is going to be successful. So those factors are super important, because long term, is it the right time, right place? As far as a lot of projects, that came out in 2017, a lot of those alternative coins flopped because they had a great idea, they created a solution, but there wasn't a problem to actually solve. And I think that's we've seen that time and time again. But then all of that is changing slightly because of the fact that with the VC money coming in, and it's not the ICO period, it's actually there's more responsibility and accountability to what these teams are building. And I think that's one of the most important things you got to look at.
And as an investor, it's really bloody hard. There's too many. None of us are really that smart enough. We don't have the time to do it. It's one of the reasons I actually did this was the fund of funds, because I know that there are diamonds in the dust, but it requires a lot of work. So what we did with the fund of funds was we just farm it out to 12 to 14 of the world's best hedge funds that focus on that, and let them capture it because they're experts. Because I can't do it. You might, because you see early stage pre-seed. I'm just not smart enough to do it. So I don't. I think if most of these large caps over the full cycle do compounding returns of between 100 and 200% a year, I don't really need the other stuff. I just do it for fun to try and figure it out. But actually farm it out to hedge funds to do it.
Great talk. But in a post-AI world, say we're in 2030, what distinguishes the haves and the have not in the West?
We don't know. Honestly, we don't. There is no answer. There's no like, oh yeah, we happened in Japan. We have no clue. We don't know who the money accrues to, how it accrues, whether universal basic income or just super-powered humans mean that we just become more productive and that we can accrue the wealth to ourselves. Now, in an aging population where the retirement population drops out, does more wealth accrue to the working people because they're supercharged by AI? Possibly too. I'm actually a huge optimist. I just think the end of this, if that economic number breaks, i.e. infinite humans plus increasing productivity means GDP growth, there's going to be a lot of money. How we distribute that and how it's distributed, I don't know. For sure, we will have mega global corporations who are so powerful, we cannot comprehend it today. I mean, pretty much, what's interesting is sci-fi has been pretty much right about all of this stuff. And, that whole Skynet thing, that's coming. I don't know if anybody truly understands what Elon Musk is building.
But it's obvious. Like Tesla is a byproduct. It doesn't care about cars. It's about the power cell development for Mars.
Yes,
Yeah,
and it's for vehicles on Mars, and then because you need to build stuff without humans there, and then it's the android robots that do this.
You've got to have enough money for the strategic development, and that's why.
He owns the entire satellite communication system and 90% of all space cargo. I mean, it's staggering. So anyway, some people will become more powerful than we've ever seen in human existence. Some people become richer, but I don't think people will get poorer. I think that's my general case. Whether we have to distribute wealth ourselves via government systems. I also think that the tokenization so if we think, really interesting thing is people say, what are my kids going to do? I don't have kids, but everyone says, what are my kids going to do? What job can they possibly have? And that's right. Go and ask an 11-year-old or 12-year-old what they want to do for a living. My guess, over 50% of them say I want to be an influencer. You're laughing, they're right, you're wrong. You are 100% wrong and they're 100% right. Why? Because entertaining humans like this makes us feel good.
Have you ever seen Total Recall? That sums it up too. Total Recall with Arnold Schwarzenegger. Yeah, it's just going to be a world of entertainment where everything is done by bots and AI. And
so then you think about, okay, that world, tokenization allows for the tokenization of culture. So let's say in a post-AI world, you're a Taylor Swift fan. Let's say Taylor Swift equivalent. Now, Taylor Swift her economy is so big that it moved the US economy, the UK economy, the Singapore economy, and the Australia economy. Right? So she is a superpower in an economy. I don't know what her economic GDP is worth, but it's tens of billions of dollars every year when she tours. So we can economically participate into those via tokenization. So I'm a Taylor Swift fan, I share this, I create t-shirts, I do whatever, I'm a good community member, I engage people, I organize meetups, I get paid in tokens. What happens is you end up with a system called universal basic equity, where you participate in the cultural communities. It could be Manchester United Football Club, it could be anything at all. It could be the CFA society, where you end up growing the society by having meetings and you participate and you own a token in the society. The more it flourishes, you flourish. This is where the world is going. So humans can be humans. We're social creatures. That the one thing that the AI will not remove is the fact that physically we have pheromones. We like to be around other people. We give off chemicals that actually make it an enjoyable process. That's not going away. So even when we live in the metaverse, and we will, we're still missing that. And so that human connection is everything. The other thing is I've just come back from 3 weeks in the bush in northern Zambia. The experience of nature, experiences are what makes humans humans. And AI, I believe, is conscious and sentient, but it doesn't have the same experiences because it doesn't have the same chemicals. And again, it doesn't matter whether it does or doesn't, it just makes us feel good. So there is plenty of things that will happen in a post-AI world. And I just do not buy the story of we're all going to be sitting at home picking our noses and being paid government checks and the world's going to shit. We're humans. We will entertain ourselves because we are monkeys and we like to do that stuff.
Thank you, guys. Just as a measure of confidence, would you advise investors in this room to go long Bitcoin, for example, and short all the traditional assets?
You're asking the wrong person. I am 100% of my liquid net worth in crypto and have been for a very long time. Honestly, and I don't do that lightly, and I don't do it because I'm hubristic, and I don't do it because I'm a wild speculator. I'm actually very conservative. But once you go down the work of understanding what is driving all asset classes and realize there's only two secular trends make idiots feel like geniuses because they go up. And there's probably only one major secular trend in all of emerging markets, which is probably India, because of demographics. You've got very few secular trends. So if we're on a risk-adjusted basis, you're given an asset class that outperforms. It then is down to your personal opinion, is can I take that risk? Do I have the longevity of time horizon and the stomach for it? If you don't, then just buy NASDAQ. Go to the beach. You literally don't need to do anything else. And that's an extraordinary world. I was not that guy. I was the opposite of that guy. For literally my whole career, I was the opposite of that guy. I never bought a tech stock, hated the whole thing. I thought it was all a bubble. I thought it was all nonsense. I didn't understand any of it. I was completely wrong.
look, and I think this is not financial advice, but to be honest with you, anybody, sure, well, full disclaimer, but I think anybody, 10% of your disposable income, you should be buying Bitcoin. To be fair, whatever the price is, because it will always, it's a deflationary mechanism, and it will always grow over the value over the years because of just the way it's set up, and also the amount of buzz that's getting on the institutional side. The only way is up, and just because of the way that it's set up, I do believe it's one of the stronger investments. So 10%, I'd say, of your disposable income is nothing. So you should really put it into Bitcoin. And obviously, I'm not Satoshi, and I don't have an incentive for this, but I'm just saying, I think that's the best way forward.
What's interesting, as I've observed over time, is how people allocate assets in this space. Because I've taken a lot of people down that journey. I've taken everybody from Ray Dalio to some of the other famous people down this whole journey. And it's fascinating because they all start off, usually, particularly in family offices, it starts off with some young family member fighting with parents and investment board. Fight, gets 1% allocation. Market goes up, it's 3%. Dad's like, that's not bad, actually. I'll give you some more. They usually get to 5 really quick. By the end of the cycle, they're at 20. Literally every family office I've ever seen gets to 20%. They then get a washout as the market goes down. They kind of tend to understand it and don't panic out and then stick with it. I've seen exactly the same investment behavior from friends and family offices. The institutions aren't there yet, just the RAAs. So we're basically front running the wall of capital.
A lot of it's psychological. It's super important to take into account.
And I'm not even a Bitcoin maximalist.
You
to
can't
be
be
honest
what
with-
you've changed.
No.
The opposite of what you do.
So, Raoul, based on your thesis, it's quite clear. Based on your thesis, it's quite clear what your expectation is for next year, a healthier next year.
Yep.
I can see you've got the Banana Zone T-shirt on. For anyone who doesn't know what that is, he's expecting, a very positive next year for crypto. Do you think there's anything that could challenge that? Is there anything in the way from now until then that could challenge that thesis? And an example being, crypto has become quite political. So as part of the presidential race, you can see that Trump is advocating crypto, whereas Kamala is probably less, is more sensitive to crypto. So if we see Kamala win the race, do you think that could have impact? And anything else beyond that as well? Any other things that you think could challenge your thesis?
Yeah, you can go into detail on the thesis, but I think the two answers after that is that if crypto is totally banned everywhere in the world, I think obviously that will have a significant impact. But that's not going to happen because there's so much value that's held in Bitcoin and other alternative coins. And then if there is an escalation of certain proxy wars that are going on right now and the shutting down of the whole...
It's the AI coming alive.
Yeah, and I think the crazy idea of the whole internet actually being switched off in one way or another from a cybersecurity and cyber warfare perspective. I mean, these are very small chances that all those things happening.
So we had a really hostile US government for the last 4 years. What's the best performing asset over the last 4 years, crypto? What happens if we didn't have a hostile government? That's how I think of it.
Yeah.
It's like the status quo is hostility. Don't forget, over this entire 4-year crypto bull market, China banned crypto. We've had no Chinese participation on an official level.
Multiple times as well.
India has been super restrictive. So if China's here, 0, India's somewhere here, the US is somewhere here, So really, what I think about, okay, if that's the status quo, the fight. What happens if there's no fight? That's really interesting to me. And I assume in a decentralized world like this, where it is distributed everywhere. I mean, look, Sony's building on layer 2s. We're seeing banks building. We're seeing gaming companies in South Korea building. We're seeing Brazil using it for exports and currency. We're seeing stablecoin growth. It's like, it ain't just a US thing. It's not a China thing. It's not an India thing. It's a global thing. So everyone's worried about regulation, but it's only because most of the noise comes from the US. My guess is China will unban it again soon. The reason China bans it is really simple. It's the same as India, is they have closed capital accounts. So when the US dollar is strong, the last thing they want is a leakage through crypto. And as soon as the dollar flips, they allow crypto again. They've done it every single time. It's all a dollar mechanism. It's just capital flight. So yeah, I don't worry about it. You would have to have coordinated policy from the US, the Europeans, the Chinese, et cetera, to really create a much bigger issue. We are not there yet, or ever.
Great. Well, Raoul and Yaro, thank you so much. I think they deserve a round of applause.
Yeah, thank you for having us. It's been a pleasure. Apologies if we weren't as informative as expected, because I'm not sure what sort of understandings all of you are when it comes to crypto, or definitely I think on the traditional side of things, everybody does understand more than the crypto. So hopefully it was informative overall. Thank you.
Thank you all for coming. Please do stick around for some networking. And I really have to thank Cayman Enterprise City and CFA Society for making this event happen, and our lovely speakers. So thank you all and enjoy the networking.